Yo, what's good everyone? Hope you're all doing well. So I'm going to do a video on GU where we're going to go through a clean entry, something that meets with the rules and why it played out, how you can manage it, how we can get involved, why we're getting involved, and really the 15-minute time frame is so powerful with supply and demand levels, and when you really understand what areas are going to hold and the reason why they're holding, you can really, along with the hourly, but you can really use the 15-minute to find your areas, and get involved in some really good trades. So what I'm going to do is go through an example which is here. Now obviously this is in hindsight, but this is the strategy. This is an sort of a trade that I would take over and over. Little bit of inducement above. So one thing to remember, the supply and demand levels that take liquidity, or if we have a supply level, or say we have a demand level and we have inducement above it, that area is more likely to then play out, and then vice versa if we have supply and then inducement sort of just below it, so, and then demand inducement above, if that makes sense. Okay, so basically the demand, supply and demand levels that are taking liquidity are more high quality and they've got more chance or a higher probability of playing out. Okay, so the example we're going to go through is here. So I'm going to go back, okay, and we can go through it. So if we zoom in, right, obviously we're bullish. Okay, so we're putting in high highs, high lows, hourly time frame. What we're looking at. Okay, so one area we could be looking at is this. We have a wick. Okay, so that is some form of a supply zone. Although it's not really, it hasn't really broken structure. It just pushed down, tested this sort of demand zone, ranged around, and then broke. And I do believe this was caused by news, but we need to understand how price is being delivered into this area. We can clearly see, look, we're putting in bullish structure, so higher highs all the way up, okay, and we're in bullish order flow. So being focused on sells rather than not looking for the buys is not really a smart move. Okay, so we need to be looking at the most recent sort of momentum and the order flow. Okay, so what is the order flow showing us? We're clearly bullish, putting in high highs, high lows. So now we know that we've got a nice impulsive move up, and what you can see is a pause in price. So that would be a POI that I would be looking for, or looking at to get long from. But then, hidden, as I've gone through before, we've got hidden supply and demand. So what do wicks show us? Well, we've got an impulsive move up. Let me just zoom right in. Impulsive move up on this candle that caused the break, momentum, and then we actually come back with this wick. We close with a bullish candle, but we come back with a wick. So what I would do is mark that on, because I know that that's going to be a 15-minute POI. So a 15-minute point of interest. So an area where we can look to get long from. Because waiting for this, price does not need to come that low before it goes up into a new high. And even from, if we're looking at getting long from here, look, even to the high we've got 41 pips. And if we're looking, if we've got a 2 pip stop loss and a 40 pip target, then obviously you can work out that's a lot of percentage to make. So waiting for that, we're gonna, more times than not, we're gonna miss out on these trades. Okay, it's going down to the 15. You can see that, look, boom, there we have it. Then we can refine it to that candle. Right, the reason that candle, because where has price broke? So we pushed up, pulled back, and broke. We broke with that there, that high, and the momentum came in on these two candles. Not hugely momentous candles compared to here, but it's still clean. So that's the candle before momentum kicked in. Last down candle, and then we can be looking to for price to come back in, identify how price is delivered into this area. So are we moving down impulsively, or are we moving on the lower time frames with confirmation, reaction? Okay. And then another point to notice is we have a bit of inducement. So I would definitely be looking at that as inducement, because we put in a high and we have a counter trend candle, and then another high was formed. Price gave a reaction. So people are looking to get long from here. What does price do? It reacts and it goes lower. So that for me is sweeping liquidity from that low. So that is inducement. So that's a reason for people to get involved. Okay, what does price do? Comes down, sweeps that inducement and comes into this area. So now we're playing with a really high quality area here. Okay, and it's just simple as that. And it's a really simple concept, but it's one that really is so powerful once you understand. So we can delete it off now. We're looking at this area. 1 minute time frame. Now, there's going to be people that say, "Oh, but this is easy when you're doing it in real life." But I've taken trades, and I've shown you what I've been looking at before it's happened multiple times. And look, these meet my entry model, my criteria, the checklist. There's more than one entry to be taken. There's one here, and when we tap into our area, I always say, don't trust the first tap. So into a demand, I usually like to see the first low be taken out. So look, we come in the very first low here, but then what does price do? It actually shows a reaction and it starts breaking structure up. Okay, we pull back, break again, pull back, break. Okay, so we've clearly seen lower time frame order flow. And another thing I want to just go through is, if I just take it back, we can go through it together. When I would use the seconds time frame. So I do use the seconds time frame, and I'm going to show you why and when I use it. Okay, so we tap in, and obviously at this point we don't know that price is going to either keep going and violate this area, or if it's going to actually push up and eventually break these highs. We don't know that. This is why we're using the lower time frames for our confirmation. So we can bring it forward. Okay, and what I would be having on here is this inside bar. Okay, I'd mark that on because I know on a 15 second or 5 second, that's going to be a range. Okay, so I've got that marked on as a little lower high. And I want to see, okay, so look, we've broken that. So that's what I would call a shift. I wouldn't call that a break of structure because it's wicked it and there's no momentum. So I'm only looking at breaks of structure when it's broken with momentum. If it's broken with a wick or correctively, it's a shift. Okay. Right. 15 second. This is what we're looking at. Let me go back to the minute and we'll just go through it. Okay, we push off. We have price coming into an area of supply. Not too important, but let's continue. So what I'm looking at is this. So we have an inside bar. Okay. And that's really caused the shift up above this inside bar. And if we can confirm that on the 15. See, look, it's really this candle. And then these two, and that's what's caused this move. So for price to come back into here makes sense, and going lower doesn't really need to because this hasn't caused any break. So 1 minute, we can just keep going, see what happens. And again, we've got a bit of inducement. Okay, everyone, so my door just went, so I had to go and answer that, but carrying on, you can see what happened. Price come in and tapped into that area. That caused the shift. And again, we have this low and then we put in a high. So that for me is a bit of inducement. Price come in, it reacts, and then it takes the low. Okay, so that's entry 1. So the 15-second, we can refine that, and we can look. We can see, look, we have the area here that's caused the break or the shift. Okay, but I would, if you're more new to the strategy or new to trading in general, I wouldn't focus on the seconds time frame. Even the minute is hard to trade if you're new. Okay, so learn the concepts. Start on the higher time frames, so the hourly, 15, 5, maybe the 3 minute, and then you can gradually, as you improve, you can, bring the time frames down, but don't rush it. Okay. So carrying on, we have a break of structure. So that's a break, and it's a double sort of confirmation. Also, look, we have another shift as well, just to mention. Okay, so we tap him, right? And I wouldn't really be taking this trade here because, as I say, I'll be waiting for that low to be taken out. But as I mentioned previously, once order flow kicks in, then I will adapt and take the entries. So we tap him, inside bar we have a shift, we have a high, pullback, another shift, high, and we push down. We mitigate what caused the push up here, and then look, momentum, we have a break. Okay, so what does price do? Taps in, and that's a very clean entry. Whether you'll be looking at that wick, you wouldn't be tagged in, or you're looking at the whole candle. For me, I'll be looking at the whole candle and then taking the EQ, because I can already tell it'd be a big sort of range. So the EQ is the halfway point, so it's roughly around there, and then I'll be looking at 2.2 pip stop loss, and that'll be my entry. Okay, and then we can see what happens. We start to commit, and then we push back. And I want to talk about when we see a 1 minute pullback, like a deep pullback like this. If we go to a higher time frame, or 5 minute, okay, so not in this case, but usually what that will be is that pullback is going to be a higher time frame sort of mitigation. So if we're looking at the 1 minute, we see a deep pullback, that will usually be a 5 minute or a 15 minute mitigation of that new demand zone created before we can then continue. So when we get that, we can then look for re-entries. So if we're taken out by this, if we're trading the stop losses here, we can re-enter once we tap into that new demand, and then again, the same as here, our confirmation on the lower time frames. Okay, and then if I just bring it, see what happens. We pull back deeper. A quick look on the 15. I think it was the 5 minute. It's going to load. 5 minute. Okay, and then look, we have the same thing where we have price pulled back deeper into sort of this region here. So our entry. So we can look for re-entries here if it meets with your plan, and then we can look. Well, we can see price. We have a break. A nice break here. We come back into that last down candle refined, and we can look for re-entries. But this did get a bit messy, but I just really want to showcase the sort of the power of understanding these demand levels on the 15 minute and then the lower time frames as our confluence, and how we can be taking entries. And then obviously the first target is going to be the high. You can see the price took that out. Now if you want to just partial your trade and then set a target out here, you can do that. If you want to trail your stop loss on the 1 minute, even the 15 minute, because the 15 minute can trend, it comes down to your own preference. You need to test it and really see what works for you. If you work a 9 to 5, just look at the 15 minute for your supply and demand levels. Understand what the hourly is doing in terms of trend. Where's the momentum? Then use the 15 for your POIs. Set your alerts at these areas. Okay, so just just on the tap in, set your alert, and then just wait for your lower time frame confirmation. Look, in this case, we tap in here, and then how long until we get an entry? Well, we get an entry here which took 38 minutes, and then a second entry which took nearly an hour. So it's only an hour. You can do it, and you can also set alerts on your structure breaks on your execution time frame as well. So if you work a 9 to 5, there's still ways that you can do this. There really isn't no excuses. You just got to find what works for you and make time for it. So yeah, I just thought I'd keep it nice and brief, go through that very clean entry, and hopefully you understand the power of these sort of trades. And yeah, backtest it. Backtest your lower time frame entries as well, confirmations, and let me know how you go.